There we go. Hey, Alex, how are you? Nice to see you as always.
Hello, yes, I will be in Bristol and it will be a great event with the Smarter Web crew and glad to be there. So if you are there, I would enjoy that a lot. So looking
Amazing.
forward.
So, Alex, please walk us through. Um, what are you expecting for Bristol? What are you expecting for June is going to be an important month. We have STRC going semi-monthly. We have SETA going daily. What's a little bit your expectations on the market? What are you seeing? What are you listening? What are you hearing?
Well, as we said last year, 2026 is the year of digital credit. And it's importantly with the success of Strive. This has shown that a company that has less number of Bitcoin on the balance sheet than Strategy can have a tremendous success in capital markets with a specific number of ingredients, of course. But as in life, a trend starts with one, then two, and then three and four and five. And I think that this is the story of 2026. And as well, you see that there are specific capital markets that make sense all around the world. The US is a major one, the major one, in fact. Japan is a major one. Europe is a major one. The UK is a major one. And you see that the companies that are focused on digital credit are the ones that are positioned into those markets. And so I think that we will see an acceleration of the growth of the existing digital credit product and an acceleration of the number of other digital credit product. At least that is our focus at Capital B.
Amazing, Alex. Alex, can you please tell us, 2026 is the rise of digital credit. We're seeing two instruments in the US. If you had to bet your Bitcoin on it, which you wouldn't, but if you had to, how many instruments would you say we would have by the end of the year? And or let's talk about market coverage. How many regions do you think we will have covered across the world with digital credit?
It is always difficult to do predictions by end of years, but I think that there are 5 to 7 companies that are focused on digital credit, and that all of them are focused on delivering on that promise as soon as possible. So whether it be that year or the next one, or 2 to 3 years, I think 2 to 3 years is probably very long, and as soon as possible is my timeline. And I think that the market conditions for this are absolutely perfect. The investment banks are also focused on digital credit, and I think that this will happen sooner than later. And you can have delays, and we've seen that, of course, in Japan, but you see the MetaPlanet team being more vocal as well right now. And you see that they are also mentioning that the US is a major avenue. And, there are places and ways to deliver on that promise sooner than what people expect. I think the main point is that by the next bull market wave, you will have probably 5 to 7 digital credit product in the market. And of course, that's an objective. And I think that this will happen. And the same way that we have seen a wave in terms of Bitcoin Treasury Company equity adoption in 2025, 2027 and 2028 will be the years of the mainstream digital credit adoption. There will be one major partnership between STRC and a major US financial institution, in my view, as well, at some point in the future. And that will greatly accelerate those things. But in fact, you could have thought that this would happen later. And in fact, STRC is already included in that main pref ETF instrument of BlackRock, and it's the second line, and that's already now. So imagine in 2 to 3 years. I think that's the main thing, that if you look forward and you put aside the current bear consolidation market that we are going through in Bitcoin, and you think what will be the state of the market in 2 to 3 years, I think it's quite obvious that digital credit will have grown in orders of magnitude, that you will have an industry, you will have a benchmark, you will have multiple players. And our focus is to be able to consolidate that position over in Europe, and that's also the position of each issuer in their specific region and market. And I think the companies with that capacity will considerably outperform in the market. We've seen that already with Strategy and Strive having great performance over the last weeks and months, and congrats to them. And I think that's more opportunity for the players that have not applied the same levels of amplification and leverage yet to their balance sheet. And specifically, Capital B has no fiat leverage on its balance sheet with its Bitcoin Treasury Company strategy today, and I think that's major opportunity for the future.
Now, this is very insightful as always. Alex, what are you expecting in terms of price action and in terms of your macro view? Like, at least my understanding is that right now Bitcoin and the markets are kind of an inflection points. We are at all-time highs. We are surfing certain volatility. What are your expectations regarding both topics, regarding macro and regarding Bitcoin price action?
I think there are three main factors that everybody is looking at right now. The number one long term is, of course, the money supply in the world. And if you look at that chart, the M2 money supply, you see that it's going up and to the right. There has been a little compression after the COVID wave. And now you can see it just going up and to the right at a velocity that just in line with the historic performance, meaning 7 to 10% devaluation per year. And I think that's the main point. And following that main point, you can just see the trajectory of Bitcoin itself. Then there is, of course, the Iran geopolitical tension. And I think this geopolitical aspect is likely going to be resolved. At least, of course, we all hope for peace in the future. And the third one is the AI wave. And that AI wave has multiple implications. The first one in the short term is an allocation of the excess liquidity into the capex investment, that historical capex investment, to have the infrastructure for the data centers and so on. And there, I would like to thank Pierre Rochard, who has been providing great analysis on that area. And I think that same capex investment is driving a lot of growth as well in the AI sector. And that growth is going to also rotate in terms of profit capture from hedge funds into the Bitcoin ecosystem. Because if you have made a lot of profits in AI, where are you going to store them? Well, it's likely that you will store them in the scarcest asset on earth, at least a portion of it, and that's Bitcoin. And also another systemic one that's in parallel of those three is the gold one. And the gold one has been very significant in my view, because there was that concept that once Bitcoin would reach a certain level, its growth would over time decelerate. And you saw how gold, in a matter of months, really went from 10 trillion market cap to 30 trillion market cap.
Yeah.
And now it's completely obvious that gold is going to grow and grow and grow again as nation states are willing to have decentralized stores of value. And you can just see Bitcoin going from a 10 trillion target market to 30 trillion target market. And if you add to that the digital credit taking 10% of the credit market, which is 300 trillion, that's already $30 trillion. That's exactly the target price in terms of following the gold curve. And that's totally possible because if you just take strategy itself, took 10% of the total equity market new issuance this year. And if you apply that to the overall credit market for a more appropriate comparison, you can just see that Bitcoin related credit instruments are going to take 10%, 20% of the market over the next 5 to 10 years. And that's Bitcoin reaching $3 million. So that's bullish. I think that's 20x from where we are right now. And if you add to that the level of amplification that the Bitcoin Treasury Company can provide, that's about 20 to 30% per year of potential BTC yield addition from Bitcoin Treasury Company. And if you add to that 20x, that's like, again, doubling or tripling that performance over time. And so that's literally going towards 50 to 100x potential. And so it's not every day that you have the possibility to get exposure to a 100x idea. And the 100x idea was the digital monopoly on intelligence-related things with internet, Google search, the Apple iPhone. And now you have that idea of digital capital and the idea of digital credit issuers and the monopoly on those sectors in a region, in a market. And those opportunities, in my view, don't present themselves very often in life. Every 10 to 20 years, we are in that opportunity area. There will be a lot of rotation from the Magnificent Seven into Bitcoin-related areas as well. And so that's really a very interesting time where 80% of the population is focused on the short-term liquidity effects of Iran geopolitical conflict, of the AI wave, of the Strait of Hormuz consequences. And 20% of the population is focused on building AI infrastructure and storing value into Bitcoin. And I think those two will be the winners. And you don't know which AI stocks will win in the next 5 to 10 years. But you know that all of the AI stocks owners will store part of their profits into Bitcoin. And so Bitcoin will be the ultimate, purest form of AI trade over the next 10 to 20 years. And you can see with the SpaceX news that Bitcoin is also forming part now of one of the most successful IPO potentially in the world, and that's going to be already like Magnificent 8 potentially with 18,000 Bitcoin from the start. And at the same time, it's only 18,000 Bitcoin, and Metaplanet is like twice that. And so Capital B is definitely willing to take up that position over the following years according to our plan. And so that's our full goal, to reach 21 to 42,000 BTC by 2028, 2029.
I was thinking of the same, Alex, when SpaceX, launched the news, which was amazing. And a couple of, I think the day before that or whatever, Strategy announced buying 25,000 Bitcoins. It was like insane. But yeah, I mean, it's great numbers. I wanted to ask you about the Strategy announcement on the 1.5 billion bond buyback. I don't know if you've seen it, probably yes. What are your thoughts on that in terms of Bitcoin in terms of the message to Bitcoin Treasury companies, and the status overall?
Well, strategy with that announcement is telling you that they are playing the long game and that they are maximizing how their equity and their digital credit infrastructure is going to scale and is going to maximize returns for investors in the long run. And Michael has been very clear that its strategy is to build the most scalable machine for Bitcoin accumulation in the long run. And the best way that strategy has found to accumulate the most amount of Bitcoin is to have STRC as the flagship product of the company. And strategy, by retiring some old convertible notes, is making it so that STRC is taking more and more potential accumulation for the future and more of the overall credit and debt structure of the company, so that strategy becomes simpler and simpler at the same time that it becomes more efficient and more efficient in the market. And so I think strategy is doing that structuration so that the structure that is working very well at Strive can also be seen at a much larger scale at strategy. And you can envision a future where strategy has retired all convertible notes, or they are retired or converted, and that's an accelerated process. And so that basically the credit quality, the credit rating of STRC is therefore improved. And when that is improved, then the product typically would trade much easily at par and higher than par to accumulate more Bitcoin. And so that's in fact accelerating the accumulation potential of strategy as we go into that new bull market. And it also is very positive for the equity, because convertible note holders typically are institutions that have short positions on the stock. And so when they get repaid, they close their positions. And so you might see also some effects in that respect over time. So it's beneficial for the equity holders because there is more Bitcoin related to a perpetual maturity date, which is not a maturity date, compared with the maturity date of the converts. On top of that, you have a convertible note holders that remove potentially their short positions because they have no interest to keep them. And you have a credit quality of the STRC that is improved. And so if you look at that math, you can see that potentially, instead of increasing further the interest rate, that increase of quality of credit of STRC through that retirement of the converts is in fact providing the same effect as an increase of the interest rate, because the credit quality is improved. And so if you scale that to more conversion of the converts and more retirements of the converts, you see that it's effectively the equivalent from an economical perspective of increasing the interest rate without having to increase the interest rate. And when you take into consideration that retiring the converts is a single event in time compared with increasing the interest rate, which is a perpetual potential event, even if you can reduce at some point in the future, this is a very beneficial restructuring for the company. Now we have to see exactly how it was performed and with which instruments that was issued. The funds were collected either with the BTC itself or with STRC and or with ATM on the equity, or a combination of those. But overall, strategy is just showing that they are looking into the future into building the most efficient, scalable, and cleanest balance sheet structure possible.
Alex, quick question there regarding balance sheets and the strength of balance sheets and so on. Can you please tell us the trend now that we're seeing in cutting off all the debt of the Bitcoin Treasury companies? Because I think it's very important and also very relevant. The move that Strategy is doing right now, we have companies like Strive, let's say, showcasing how they don't hold debt. So can you please walk us through like this whole movement we're seeing from Bitcoin Treasury companies that went from a debt model onto a non-debt model for everybody who's watching to understand how and why?
So I don't think it is a movement from debt to non-debt, because there are still payment obligations from the companies or payment need for the company. And so, in fact, in my view, it's more a question of maturity date. It is a question of going from a fixed maturity date to a perpetual maturity, which allows to maximize for the equity investors the potential increase of Bitcoin per share over time, because you reduce to the maximum the risk of a payment maturity date that would come into a Bitcoin bear market. And with a CAGR of Bitcoin of more than 2%, well, that is also extremely beneficial for the credit holders, because the perpetual maturity date allows Strategy to be able to pay the dividends with the Bitcoin they already have on the balance sheet at perpetuity, if Bitcoin grows by more than basically 2 or so percent. And so while the convertible notes may oblige the company to sell precious assets at a time that is not the perfect time, because it might be a time where Bitcoin is not in strength, or sell equity at a time that would not be ideal. The fact that you are moving from a convertible note with a fixed time towards a perpetual date that is, of course, perpetual, that is in fact, reducing the obligations at fixed dates by 10x, because you go from a fixed obligation in 2026, 2027, or 2028 for the convertible notes of Strategy, the put dates, for example, towards a reduction of 10x, going from the full amount to basically 11.5% per year, which is about 11.5% of the total notional amount. And so that increases the number of years that Strategy has a capacity to pay the dividends without doing anything. And so that also increases the optionality for the company. It increases the credit ratings of the company. And so it allows as well to issue more perpetual digital credit for the company. And so at the end of the day, that operation allows the company to maximize the digital credit amplification and the Bitcoin per share increase with a perpetual obligation, with the preferred equity here that is maximizing both the future returns potential for the equity holders with a minimized risk, and that is also maximizing the credit analysis, minimizing the credit risk, for the credit investors. And so it's very beneficial in all ways.
And how does this change like the day-to-day and let's say the Bitcoin management and the treasury management for companies, Alex, for everybody who's listening to what you're saying right now?
So, well, I think the most important part for investors listening is that digital credit in the perpetual listed format is automating, scaling, and distributing Bitcoin-backed credit instruments in a way that is fully accessible by individual investors, in a way that can be integrated within traditional brokerage platforms and within hedge fund mandates, and with a ticker that's fully accessible with an ATM program on top of that digital credit product that allows the company to have a sustained, scalable, and distributable advantage with a product that's listed and that the company can focus its time and energy on the distribution. And that will be a major, major, major difference when we go into the next bull market that we are anticipating. Because last year, when we went into the major bull market in Bitcoin, of course, it was slightly lowered in some ways, but we still went to 125K plus dollars BTC. And when you compare that to the bottom, the bottom was like 15K. So it's almost 10x. And so if you would take even just the same, and you would say bottom is like 60K, 10x, I let you do the calculation, but it's slightly higher than 70K, so or 80K. So even if that was half that, it's like 300K. And I think that that digital credit product listed in place for many Bitcoin treasury companies will be a major difference when we enter that new bull market, because those companies will be able to scale, automate, and integrate that product into traditional finance in a way that will fully accompany the growth of the ecosystem, and that will also add much more Bitcoin buying pressure into the system. Because whenever the Bitcoin price does 2x, the digital credit issuance capacity of the companies also increased at least by 50%, and even potentially by 2x as well. I say 50% to 10x to 2x because if the company is at 20% leverage, if Bitcoin does 2x, then you can basically double the issuance and stay at 20%. And if the leverage is already at 40%, you can imagine that the company could keep that at 40 or lower that a little bit towards 30 or even 20 to make sure that the leverage ratios remain conservative, for example. And so you can see that as Bitcoin grows, digital credit capacity can grow hand in hand. And that also feeds into the Bitcoin bull market, because if Strategy has been able to buy like 1 billion per certain days in the bear market, imagine when they are able to buy $10 billion of Bitcoin a day. And that will happen. That will happen because there will be so much demand in the equity, and there will be so much demand in the credit side that this will completely exceed people's anticipation, because people don't realize that the bigger you grow in traditional finance, the more you can issue credit. And credit market is 3x bigger the equity market, and the credit market is 10x bigger the digital gold market. And that's basically the recipe for Bitcoin going towards $1 to $3 million a Bitcoin. That's with the digital credit issuance. And that digital credit issuance provides about a 20 to 30% amplification leverage that's native in the equity market. And that 20 to 30% amplification is in and of itself an acceleration component for the Bitcoin demand. And I think that's not priced in at all. Nobody knows about STRC. Nobody knows about SATA. And, even people, I'm shocked, but even people within the digital asset industry, I'm serious. Like in Bitcoin, you find people that don't know about STRC. But if you go into digital asset institutional land, like 90% of people don't know about digital credit yet. So when the bull market comes and they realize what is happening, they realize that their stable coins have no use case, they realize that their tokenized money market funds have no use case, they realize that basically the future of digital money is basically tokenized, integrated digital credit within banking rails. And of course, the future is more nuanced than that. You will have room for all of those products. But the fact of the matter is that digital credit is better. And it's a technology that works. And the technology that works gets adopted. And it's already getting adopted. It's like already 10 billion in 10 months and more. And it will grow toward 100 billion and to a trillion in the next 10 years. And even that is small compared with the $1 quadrillion of assets in the world. And it tells you that those predictions are optimistic, but realistic as well, based on math, based on scarcity, and based on the growth of the money supply, and based on the demand that we are seeing in the market. And everybody is organizing in the industry right now to create, structure, and distribute digital credit at scale. And I think that's the signal. And all other things related to whether there will be a peace agreement in Iran, or whether there will be some AI that will disrupt jobs in some sector in the economy and this kind of stuff, completely doesn't matter when it comes to the M2 money supply that is going up and to the right. And the only way to win in that context is to have a lot of Bitcoin or hold digital credit, whether you are on the Bitcoin standard or the fiat standard. Those are the two solutions. You're on the Bitcoin standard, Bitcoin and Bitcoin Treasury Companies are the solution. You're on the fiat standard, probably digital credit is part of the solution. And even for people in the Bitcoin standard, well, organizing to structure, create, distribute digital credit is also one of the greatest way to contribute to Bitcoin adoption. And as you've proven with Roxom, even for Bitcoiners, digital credit can also be a great way to accumulate more Bitcoin in the end. So I think that's very bullish for the overall sector. It's a market for patient investors still, I would say, because it's volatile. It's definitely a market that's a crab market going into the 70 to 90K range. And at the same time, I think 2026 is the greatest opportunity for investors to position in size for the future of the inevitable digital capital and digital credit growth. And that asymmetry of information needs to be harnessed. And I think that around that table, we are harnessing it. So the future is bright.
Alex, as always, thank you so much. Thank you so much for sharing your knowledge, your insights, your comments. And we're very much looking forward to seeing you in Bristol in a few days, and onwards and upwards.
All right. See you guys. Thank you so
Alex.
much.
Thank you very much.
Thank you so much, Alex.